Starting now. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for June 30th, 2025. We are recording this at uh, at 7 p.m. Eastern Time, and this is episode number 483. My name is David Kosmeter. I'm the creator of TimingResearch.com, and you should be seeing my screen right now. But I have also arranged for a great expert panel to join us. So Norman Hallett, Michael Filighera, and Alaina Nicole are back with us. And Jim, the option professor, is here to moderate. So I'm going to turn it over to him.
Okay, great. Okay, thanks for everybody for being here. We have obviously all-time highs on the NASDAQ and the S&P, so we'll have a lot to talk about here to see if
We
this
will.
thing will ever stop. I see the RSI here. If it gets any higher, they're going to have to get nosebleed ice or something, but it's going on and on. So
Yes,
let's
sir.
talk about it here. We're going to start out with is it Alaina? Hello?
It's Alaina.
I just want to make sure I pronounce it right.
Oh,
Not
your pleasure.
not Elaine, it's Alaina.
Yes.
Okay, so Alaina, let's start out with you and give a little overview on how you're thinking this S&P is up here. I mean, is it a deal where we're going to keep going unabated as we go into the 4th of July holiday and this swell of good news like the big beautiful bill and all that? Or do you think we might have a bit of a pullback?
So I think right now, the biggest thing I'm looking for, because I'm here for the all-time highs, like the SPX is like actually my favorite thing to trade. But
Sure,
the only thing that I'm kind of watching for now is with this tariff pause deadline, like the 90 days on July the 9th. I'm
right.
just looking for like any type of headlines, just to see how the market reacts. I would love for us to keep it going, but I know that tariff talk kind of shakes the things up. So we'll see. Hopefully we can maintain this. I would love to stay up here
Yeah, because right now that's what it looks like. There's really not a lot of evidence of it turning around right now, huh?
for
The
sure.
way the prices are going. Yeah. Norm, what's your idea up here? Do you have any kind of a counting system that says we're tapped out or anything like that?
Yeah, 1, 2, 3 is the accounting system. The I am looking right now at a classic head and shoulders formation that classically breaks higher if we can, have a decent bar. Today bar, we need that big bar to break out of this on the right side. But the fact that the right shoulder is higher than the left shoulder gives you additional feeling that we may go higher. But in our current environment, as Elena alluded to, whatever our leader says,
Yeah.
tariffs or no tariffs, is going to affect what happens here, at least on a momentary basis. But this bottom was caused by the fear of heavy tariffs and everybody complaining. And now it looks like we're making peace with everybody. Canada, who is our arch enemy now, is now succumbing to certain pressures. It seems as if Trump's general, whether you agree with him or not, his general approach of causing angst and then relieving the angst um, causes higher prices, and that's been the case. So we'll have to see. We're at a right above a particular neckline here, and we need to see some decent candles to go higher. But right now, this is the point. We are at the critical point right now, as I see it.
Yeah, these brokerage firms and banks are going to announce their earnings starting July 15. And I look at that chart and all I can think of is, God, did they make a lot of money by de-risking high net worth people and institutions and then having all that volume have to come right back in the next month? I
Yeah.
mean, that is like the dream of dreams for a market maker to get all that volume on the downside and all that volume coming back up now. And maybe there's more to come because all those de-riskers haven't really brought their levels of equities up to the normal level yet.
Mm, you never
So it'll
know.
be interesting. Michael, what's your take on this thing?
Interestingly enough, my take,
You want to throw your chart up and do a little Fibonacci counting? Because the last time you were here,
well, I
you did
can.
mention 6,200, and that 6,200 came to pass. So let's see if your
I
crystal
definitely
ball
can do that. Let me just see. I got
Swami
the
hat
chart, but
still
I just
works
got it
over
over
there.
here.
Yeah.
Where are we? Over here. No. Where are we? Hold on. I'll get there.
your photo's up there, but that's
I
not telling us
know.
much
I
about the
just
stock
now I
market.
can't find it.
It's telling me a little
And
about
go
you.
over here. Go over here. Where's my Zoom meeting? I have to go to Zoom.
Yeah,
There we
just have to
are.
share, right?
Yeah, I will. I get there
Yeah.
eventually. Um, there. Now I got to go back down here. Share. All right. I'm getting there, folks. Um, what I think actually, Jim, today is it's something that is continuing. I have been expecting it to continue.
Yeah.
Uh,
There
but
you go.
but sincerely, what I think is really taking place today is, of course, we had JP Morgan roll their quarterly collar.
Yeah. Where's the strikes on the collar now? Because that's been a very good indicator for you too.
65.05 on the calls and 58.70 on the puts. They normally keep it the range within 3%. So
Yeah.
either 3% down, 3% up. In this case, it was about 3% up and on the collar.
And that's a quarterly collar, right? So it'll go
Yeah,
to
so it's
September.
in September, September 30th.
And that's probably
And
really
then,
good parameters because there's a gap underneath that might not get filled, and that would be your 5,800 area, and then
yeah,
6,500 certainly another 300 of people running in there might be about it. You know what I mean?
well, but also what it created in putting this on was about 1.4 billion worth of cover, worth of, just kind of hedging.
Yeah.
And then on top of this, I don't know if other people were aware of it, but somebody came in and just to the last half hour of trading before this whole expiration occurs and put up some massive positions for July 18th. So it's the July monthly in Apple. And that
Yeah.
equaled about $580 million worth of hedge going up in the last half hour of trading today. That managed to push the SPX up 20 points.
Yeah.
And it had already started to move up because of the switching, moving the collar. Putting that all together, um, I'm still looking for eventually this level and 6,400.
Yeah.
But I cannot deny and say that, well, 68's in the water, out of the water. Now, the big challenge for me is that when I talk to and hear from other people, they're really believing that this whole upside move carries through September. And
Well,
I can't deny or say never because of everything that we're witnessing. I mean, we saw this huge collar, we saw all these big moves. We're moving into other areas. Um, but if I had to say, which I did because people ask me, well, what do I think that could end it? And I don't think it's actually going to be market driven. I think, or even earnings driven. We've seen how even against uh, warnings about eventual, the impact of tariffs and things of that nature, markets and the individual underlying stocks continue to rally. Not all of them, but when you're putting massive amounts within, like the Mag 7, within the top tier of equities. But so what I think is going to be hanging out there, number one, I've told you about this one before, Jim, is our treasuries. I think there is something underfoot in the treasuries, even though we saw this little bit of a walk into safety today with the 30-year, being up, I think it was up a point. Yeah, it's up over a point now. I think we're getting that going on, but at the same time, yields are, yeah, they're reacting because the underlying bond is, but they're continuing to sell the dollar. So I think there's just a combination of things right now. Uh, China is definitely underfoot to dethrone the United States from being, or the U.S. dollar, I should say, from being the world currency of trade. And that's well underway, and we continue to see the dollar to
No, it's
just
uh,
get
it's
hit.
funny that you mentioned that because Besant was on Bloomberg or one of the channels, and he seemed like he was really hoping that he was like really pitching that the stable coin is going to help the dollar because who'd want to have a stable coin linked to the euro or the Chinese
Ah,
currency because you can't trust them. And so I mean, there is a little bit of a panic down there that the
there's a little
dollar,
bit of a
which,
panic, but it's
yeah,
not
it could have
making any
stopped at
sense.
98. It could have stopped at 98 and it didn't.
It did
And now
not.
it very easily
Amen.
could just collapse down to 90.
Amen.
And so
Yes.
he had something in his voice of like, the stable coin is definitely going to help us because, people aren't going to want any other stable coin but the dollar one. And
Yeah.
he's saying that while Rome is burning a bit here, huh?
Well, Rome is burning, but then we can't forget that three the major credit agencies for sovereign debt have downgraded the United States. And
Yeah.
so that's really it's throwing a wrench into a lot of different things. So I believe that the canary in the coal mine are treasuries. And the pressure that's getting put on Jerome Powell to like, oh, come through, you got to cut the rates. It's like it's just to me ludicrous because why would you cut the rates to release even more money out into the system when we're getting ready to add what we're going to add if they pass this bill to the debt. So I
Yeah.
think that it's going to come into treasuries because I believe that it's not going to be earnings. So
Do
that
you have
puts
a
it into the
resistance point there of 62.47? Because that looks like it's 61.8 or something.
well, it's actually yes, there is a 0.618 there, but to tell you the truth, Jim, let me bring it down to the hourly. You'll see it more clearly. That is just this small wave here, and that's just finishing this third wave. So then we get another four, and then we get another five. So
But
this,
from that level of 62.47, there could be a drop of which
there
would be
could be,
another
yes,
little
yes,
wave. The reason I
there
say
could
that
be.
is I'm looking at the VIX. And Norm, do you use the VIX much anymore or not too much? Norm, you use the VIX? VIX?
Uh, not really much. I don't use the VIX. I look at the dollar index and so on, but
Yeah.
I
Yeah, the
generally look at.
volatility index, if it gets under certain levels, like when it broke under recently, the 2018 level, it was
Yeah,
pretty much a green light that we were going to go on a big rally because when the VIX is under those levels, people are very comfortable buying stock. And now
right.
that VIX bottomed out at 16, and I'm wondering, and even though the rally today, the VIX was up, and that's generally not what happens. So I just
I
was
think
wondering if the VIX bottomed at 16 this week, oh, not this week, but last week and this thing is running into 62.47 and you started seeing the VIX above 18,
that could kick it down as well.
it,
Yeah, you're
it
right.
could kick it down. There's a gap around 19 or 20 on the VIX. So, if the
Right,
VIX goes from 16 to 20, there's no doubt the stock market's coming down.
right. But I think
And
but I
yeah,
think we have to also include, Jim, and I know you realize this as well, that we're up in new all-time highs. So you have to look at like where's resistance? It's mathematical.
Yeah.
It's not like, oh, we've been here, so we should find some price resistance here. We've never been up here. And the
yeah,
fact
but I
is,
see I see gaps at 60.40 on the S&P
oh
and I
yeah,
see gaps at 6100 on the S&P.
yes, you did.
And so
And we had a
if
very
it did
small one today. We got a
yeah,
little one on our opening today. We got another little one.
Which
yeah.
kind of leads me to my question, Michael. I'm so glad you're here because you're one of the few guys I trust with Elliot.
Yeah.
It tends to me, Elliot has always given me the 30,000-foot view of things,
Yeah, it does. Yeah.
only because there always seemed to be an excuse for Elliot to counter to go against some of the shorter term predictions with the longer term, more accurate way of looking at things. So my question to you is, I started this by talking about seeing a perfect head and shoulders bottom,
Right.
but where does Elliott see the top of this market?
Between 64 and 68.
Okay.
And that's really pulling it in. I mean, I can take you
Tom
out.
Lee's got it at 6,600, so he's in the same
Yeah, he's up there.
county. He's in the
This is
same
my
county.
longest term count that I got. And it goes back, it starts in 1928. So this is the cash. This is SPX. And that's
Before I
Grand
was
Super
born.
Cycle.
Wow.
Yeah, it was before me too. It's Grand Super Cycle, cycle degree. So I think what we're finishing up here is cycle wave three. Now, that would suggest and that cycle wave three began in 1949. So you can do the math on that one to realize that it's been in force for about 76 years. If we just take a regular and see this green box, when the next correction comes, that's where I think we get to.
I see.
So again, I get up on my soapbox and I say, what's going to be corrected is the last 16 years
Mm.
of too much money.
High valuation and lower interest rates and this, that,
Exactly,
and the real
exactly.
estate
And then,
going up too much and all the rest of it.
right. But guess what? And this is what I also will add. The good news is that, yep, a lot of stuff's going to get flushed out. A lot of things, I mean, across the board, I think it's going to happen, not just to the markets, but to many, many things. It's like time to get rid of everything that's happened. Let's start anew. And I think that's what's going to happen here because after a cycle wave four comes a cycle wave five, and that's back up, and that's again to new all-time highs, no matter how high we get now. In that next larger expansion phase, the market will again go, if it's 68, it's going to go above 68. Now, the thing is, it's like it may take 15, 20 years.
Yeah.
I don't think I'll be here, but you
I
never
And
mean,
that's
know.
if
one of the
we if
reasons I
we
don't. That's one of the reasons I use Elliott as more of an sidebar entertainment than
Oh,
something to
now,
really
oh,
trade
Jim.
that
against.
hurts. That
Because
hurts.
I like to use the well, no, I just like to use the moving averages, because when Michael's talking about, they'll show up in the moving averages because you're going to have, if you're going
Absolutely.
down to the levels he's talking about, believe me, those averages will be pointing down at some time.
Oh,
But
absolutely. Yeah. And no,
but
you're right, Jim.
right now you'd be fighting a current that
Uh, uh,
you know would be
Well,
very tough to do.
I hate to
But I mean,
say
I
though,
listen, like you say, we've seen it at 2,700 during the COVID, and then
oh
we've
yeah,
seen it at 6,200. We saw it at 4,800.
we
So
saw
to
it at
say things can't happen is
6,600. We
just silly.
saw it at
You don't ever say things can't
666
happen. Yeah, yeah,
back in 2009. That was the
yeah,
great financial collapse that we all
yeah.
remember, right?
so,
You
And
Michael,
remember that?
we're always thinking, Michael, about we always have kind of fun throwing some fundamental behind what the true math that drives all of
Hey,
this. I mean,
right.
the price says everything. We all know that. So, what do you think, if we're going to have some fun, what is going to cause this movement up? And then is it the final
Geo,
realization, the final
geopolitical.
approaching of the deficit, or are we actually
No,
going to take it
well,
more
it
seriously?
might. It could be that. I think treasuries are actually going to be a very large factor, but I think the kick is going to be geopolitical.
What about real estate? It's the highest price of all time. The affordability index is at the lowest of all time,
Right.
and the sales are at a 2009 level, and the foreclosures are starting to pick up.
Well, I
So if
hate
you
to
add all
say
that
it,
up,
but
does that sound like a recipe of a correction
mm,
in real estate?
uh,
And Norm, you're in the headquarters down there. The people in Florida are kind of, doing a little
right.
mutiny on the bounty down there a little bit, aren't they? Or is that
Yeah,
overstated, Norm?
there were some pockets. I'm
Yeah,
lucky to live in
Tampa.
a pocket
Yeah,
that maintains things, but
yeah.
real estate prices, are suffering down here, and but I'd like to hear from Alaina,
Yeah, I was going to say, Elena, could you share your screen? And I was going to get to that, but I was letting Michael run as far as he wanted. What
Thank
do you
you.
call it?
would
Elena, could you share your screen and share with us a little bit of your techniques? Because you say you do like to trade that S&P,
I
and
do.
I think we'd all love to hear, how you approach that.
Yeah, so just to your point earlier, when you were talking about like what's going to push the market, I think another thing that's going to help is retail because they're like just super like just buying no matter what. Like every dip gets bought up immediately. So I do think that'll help as well. Like I just keep seeing how like more and more people are falling into the market and they're just buying like nonstop.
Yeah.
But yeah, so usually when I trade, I like to track like the ES, and then I'll also I call it like my S&P sandwich. But I'll throw up the SPX in the middle and then the VIX on the right side. And you can see we're in a gap. I know you guys were just talking about VIX. But yeah, typically I'm just looking for basically the first thing is like, are we breaking higher or lower? But I really am more so a catalyst trader now. So I just like to wait until like, geopolitical stuff, which has been insane, tariff talk, the economic reports, of course, like Powell, like any type of Fed speakers, certain ones can kind of shake the market up too. But Yeah, we
We
pretty
got
much.
what jobs on Thursday be one of them too?
Oh yeah, for sure.
Maybe.
For sure. And the only thing I don't like is that it's a short week. I don't
Yeah.
like to trade during holiday weeks because the market is, there's just no momentum. So, and even like, I would say over the last like maybe week or so, because I'm a day trader, predominantly I scalp. And so I actually do need some type of push just because the contracts on the S&P tend to have
Mhm.
really high beta.
Mhm.
And so sometimes I'll actually trade the futures as well. Like I'll do the E-minis, um, just to kind of get away from that time decay because it's gnarly on the contracts.
Yeah.
And what time frame do you generally use when you're doing your day trading? Is it as short as like a 1 minute graph, or would it be a 5 minute
Yeah,
graph? Or
yeah. Usually I'll have the ES up on a 3, and that's kind of like my guiding light, I like to call it. And then I'll have the VIX up too. Like I like when they are in their true inverse form.
yeah.
And then the SPX, I'll keep it on the minute, just so I can see what's going on. But I definitely like to see the ES because, of course, this is going to hit its psychological levels. It's going to jump into its gaps and things a little faster.
hmm
And then this one and SPY as well, kind of follow behind. But yeah, this is literally my setup.
So you were seeing kind of like I was seeing that around 2 weeks ago when the VIX broke under 20, you had
Hmm.
a kind of a green light to stay long or get long, or if you're going to play it
Right.
from the long side, right?
Yeah,
Right.
for
Right.
sure.
Yeah.
And
And now we're
especially,
kind of at a juncture where, we're banging up to 6,200. The VIX has bottomed out last week at 16. And
mhm.
it is possible that if this 62.47 holds up that Michael's talking about, it might be a region where there's a play on the short side, even though obviously it's a very strong market, right?
Wow.
Yeah,
Wow.
I think all eyes are literally right now on tariffs. I think
Yeah.
that's
Yeah.
insane.
Yeah.
April 9th, July 9th, and that's going to be coming up. Norm, you want to share your screen, and do you have some of the markets that you're kind of focused on, or kind of
Okay.
keeping track in? I know you use the Japanese candle charts or whatever, right?
Yes, I'm very international.
What's that?
Uh,
John Wick's charts, the Wick.
I love that new movie. Ballerina was fabulous. Um,
Oh yeah.
it was great. This is the chart of platinum. Look at this chart. The forgotten precious metals. You know, when gold. This is the 5 minute chart that I trade from. But if you look at the day chart, you can see what happened recently. Look at this move. Um, it was a 30% move, literally in June, and we can talk about the reasons for that, the, the interest in precious metals, etc. But back in um, back in 1980, when the Hunt brothers were probably before your time, Alaina, I'm sure, was cornering the silver market. Silver went from about $2 to $50, and gold went from about 200 to 850 at that time, which these were all record highs. And platinum at that time, when gold was 850, platinum was $1,150. It was literally 30% more than. Since then, platinum has rescinded in its relationship to gold and silver. I like to trade the gold silver ratio, but now I've got an interest in platinum because of what you're seeing. There's
Mhm.
something happening here. What it is ain't exactly clear.
Well,
I
actually,
know.
Norm, let me chime in a little bit because I actually played this one through a couple of mining stocks that did very good. The reason is that China blew up their buying the jewelers because of gold being so expensive. Jewelry sales were tanking. So in Q1, they bought like 100% more than they normally did. And platinum's a thin market, so they squeezed it pretty darn good. And obviously, they said in this article, which was like 2 months ago when we were, at the 900 to 1,000 area, they said it was going to last through July.
Hmm.
So it still seems like, that's why I've ridden this um, stock that deals in platinum and palladium plus gold,
Hmm.
because palladium was another one that I'm sure you saw Norm start to get some legs
Yeah,
too, right?
Lady, you talk about thin. I mean, you and I are thin, but that
That's
market
why I play the stock options on it. There's
has.
no way I'm trading the futures on that stuff.
There's something else I want to point out from a day trade. Well,
Sure.
this is the daily standpoint. I love the 34, which is a Fibonacci moving average. These are all EMAs. This is the 8, which really used to be called the golden whatever mean, but I always look for literally two. When this happened, this breakout, I look for two closes below the 8, and we have not seen that the entire time. In other words, I'd be in this if this was a day trade, but even going day over day, when we have not. But when we move this far from you can do this until these moving averages that get too far away. There will likely be a corrective action, but the idea is, I mean, look at this RSI staying within strong range. I like, from a trader standpoint, I like trading this market, and right now I think you got to be a little careful and put in your limit orders and so on because of what you mentioned with the thinness, but look, even on a daily basis, the 5-minute chart, two closes under the 8 is not even happening. Here's one here. So here's an area where you may expect some, but now we're getting sideways. But what I'm saying is that this is a market to be watching. I mean, if you look here, two closes above the 8, we didn't see it all the way down. We saw it here, and if you got out here, wouldn't have been a bad place and formed a double bottom. But the idea is that I'm watching platinum. If you ask me what I like right now, I think this has the potential to see 2,000, 2,500. Gold is now twice the price, more than twice the price of platinum. Doesn't belong there. So I'm with the Chinese on this.
Yeah, it's pretty good. Why don't you talk a little bit about the psychology of trading, and then I was going to ask Alaina to do the same.
I agree.
I'd love to hear your guys' philosophy on how to help people with that. So let's start with Norm, and then we'll roll over to Alaina.
I appreciate that. We have a special actually going on. It ends tonight. It's been for the last few days. If you can put in the chat, the disciplinetrader.com/excel, all small letters. We have a course that helps you to get out of your own way when you trade. I mean, what's happening now as you look at the VIX, you can almost see as the VIX increases, so do the emotions. And so, this is a time to listen. I was talking to Alaina before we actually got live here, that the importance of the mental and emotional, you have the capabilities. It's just a matter of expressing those capabilities in a calm and orderly form. And to do that, you need to approach the subconscious mind. And that's what we do. We work with meditations as well as something called EFT, which is the emotional freedom technique, which is used by for those soldiers coming back from war, to help with their the conditions that is so that trauma of war. But I'm not comparing that with the trauma of traders, although we have our own traumas when you all of a sudden take some huge losses in your personal money. But if it can work for the soldiers, it can work for us. So we've developed sessions for traders on the emotional freedom technique as well as the subconscious training. So we put it all together in this program Excel that we're running now. The recordings of our $1,000 trading for only $397. It ends tonight, so you may want to take a look at that before it ends. But I'm so glad to see Alaina here, who is an advocate for this. It's the thing is that the mental and emotional part is not a big seller. And to stay in business, you have to be adamant with having traders understand that the mental and emotional piece is the key for most people. Listen, there's a lot of we've got 4 great traders here whose systems can make you money. There's no question about that. So there's different ways to do that. But the mental and emotional piece is what has you get in your own way. It's the ego. It's the lack of giving credence to the most important part. You really should be spending at least a third or half of your time on training your mind to be a better trader. And I think Alaina would agree with me on that.
Yeah, wholeheartedly. It's what separates traders from people who end up just walking away from it ultimately. We do a lot of work on like meditating, like just nervous system, regulating your emotions. Basically, with my students, instead of focus, I feel like a lot of times the focus is on like sizing up and going big and making all this money. And I try to tell them, it's the money is a side effect. You know, the like gains are the result of the shift inside. And so I really try to I tell them that like our brains, they're almost like babies, and we have to trick them into operating efficiently. And anytime we do something that they're not, our brain isn't used to, like sizing up or, doing something like taking trading a ticker we're not familiar with. Just little things like that can throw your whole system off. And so, yeah, it's just about like finding a size that is comfortable for you, even a portfolio amount, right? Some traders grow their account to a certain amount and then their risk tolerance goes through the roof because now they want to, go faster and get ahead further or quicker. And so, yeah, it's just about, slowing down, getting locked in with yourself, understanding your body's like somatic signals because sometimes like we can't put into words what we're feeling, but our bodies will send us the signal. And just learning how to read that and learning how to use it to our advantage, because that's all we have. The market's going to do what it wants, and the only thing we can actually control is ourselves. And so that's like the biggest
No.
I try to convey.
Well said. And I think that, what I try to get them started with is understanding that, when you struggle and you ignore that part, you learn to anticipate every day as a struggle, every day as a losing day, possibly. And in other words, you have a losing mentality. Or even, and if you're a pretty good trader, you may have a break-even mentality, and all you're doing is wasting all your time. The idea is that the first thing you have to do is create a positive expectation. You have to open your charts every day believing that you're going to win. And to do that, you have to have had a certain series of winning, which is why we opened a trading room recently, with a former CBOT floor trader that is just teaches traders how to win on a daily basis. I mean, yes, they'll be losing days, but when you can have 3 out of 4 winning days and the losing day is controlled, and the winning days are moderate, but then you have a nice big day in one of those days, you start to learn that winning is a habit also. So winning and losing is a habit, and in order to even abide by what you're saying, Alaina, what I do, you have to start with that winning expectation. Um,
Mhm.
Otherwise, it may all fall apart. So, spending time in this area, I'm so glad that there's an advocate with me on this. Not that you guys are not advocates, but you guys understand the importance of the technical analysis, which is equally important. But the other equal is ignored, and so I'm really glad we're giving some emphasis to that today.
Absolutely.
And can I add one more thing that I think is so important for traders and investors? It's just like with your identity, I think it's very important to not keep thinking of yourself as a beginner because like it kind of tricks your brain into thinking it's cool to keep making like obvious mistakes. So like I try to tell everyone, if you've gone in the market and you've extracted $1, like you're not a beginner anymore. And so like you have to start learning from things and you have to start applying that new information to shift it in the right direction.
Right.
Hey,
Bravo.
how do you guys address the positioning aspect? Like, do you use the micros, or are you based on like each Norm and Alaina? How do you guys address the positioning factor?
Yeah.
Alaina?
Oh, go ahead.
No, go ahead, Alaina.
Yeah, so we have a 5% rule. So like no more than 5% of your account should be in an active open trade. And I think that helps them not over leverage. Actually, 5% is like the max. So like maybe more like 2% I'm okay with. But some people have that risk appetite. But yeah, I think it's more important to have a system than to be sizing up because sizing up is it doesn't make sense if you're not consistently profitable. It's actually counterintuitive, counterproductive, I mean.
Yeah, and Alaina mentioned it before. I mean, Alaina, you mentioned a proclivity. That's a big word there, Michael. It's one of your words.
That's
Proclivity
a
toward.
University of Cincinnati word.
There it is. That's a big Bearcats. The scalping area. The less you ask from a market, the more you're likely to get what you ask for. So if you have a strong trigger,
Mhm.
um, and that trigger, if you have an A, what I call an A plus trigger, hopefully you're trading with just A and A plus triggers. The A plus triggers are in sweet spots. And I guess I'm still sharing my screen here. But when you have the moving averages that come together, um, when you have a trigger in one of those moving averages, let's take a look. This is the copper market. I'm sure we'll see one here. But the idea is that if you here's one of our triggers right here. When you have the moving averages together and you get a trigger, this is a high probability of a quick move. And we do some of that measuring by we call this the extension candle, but you would have taken your scalp right here. In other words, the answer to your question is the high probability. I'm going to stop the sharing here, but the high probability, you stick to the high probability triggers in the sweet spots. And if you can have the patience to do that, and that's what it takes. And I think Alaina will agree with me, patience is, I mean, it's okay to have no trades that day, but the patience is really, that's where we get most of our testimonials, because that's the biggest problem for a lot of traders. Listen,
Right.
I'm like that. I want to be in when I can, because I can't make money out of sitting, but you have to be patient to wait for that A plus trigger. So to develop that positive expectation, you need to stick to the A plus triggers in the sweet spots. And I know our system has 4 of them. I'm sure Alaina has her sweet spots there, but it's, but here we are talking about the mental part in conjunction with the technical part. And this is more of what traders need to do.
It's a part of the technical picture.
Michael, when you do your shorter term trading, you want to throw your chart up and give some ideas on how you try to address when's a good time to get in, and
Sure.
how do you navigate these things?
I can do that. First of all, let me just start by saying, Alaina, I just bought your book.
Well, thank you so much. I hope
You're
you.
welcome. I mean, come on. Part of what I do, Norman, so that you also understand, I do a lot of mindset work, and that is a part of my coaching. And so within that is everything you guys were just talking about. And so I'm just going to put my own 5 cents in and saying it is a very, very important part of trading. It is learning how to work with the self-saboteur that lives within us. Uh, and there's many different reasons why that saboteur could be there. And and you're right about the patience, Norm. And the other thing that I would add is that you you are waiting for that your signal. And when you get that strong signal, your A plus signal, second part is patience to get it, but the second part is going to be faith and belief, and that it's going to do exactly what you think it is. Because I think that's what happens. People get in and maybe it'll downtick real quick, and then they're like, oh my God, without realizing it's like, no, you got your signal, now just be patient. So I try to let people know that part of dealing in a mindset is have a reason to get into the trade. Your A plus signal gets triggered. That's a good reason. And then your second one would be what's your goal on the trade? Well, if you're a scalper, maybe it's going to be $100, $200. But see, then you've got the part two. But the third and most important part for me that a lot of people walk beyond or don't use is where you're going to put your stop in case it's invalidated. Because as part of the mindset, if we're taking that A plus trade and it doesn't work out, we take it personal. What did I do? I'm a fool. I didn't see this. What's wrong with me? And nothing. There's nothing wrong with you. If you have part three, you don't have to worry about being right or wrong. When the trade becomes invalidated, it wasn't you. It's just the way the market was trading at that particular time. And Jim,
Absolutely.
you asked me to go down to, and I'm going to drop it down to a 5 minute chart. And actually, I use NinjaTrader. That's where my trading screens are. And so that's actually, I don't have that open right now. And so with on there, I have my moving averages, but I trade off of a 2 minute screen. 1 minute drives me too crazy. 3 minute I'll go to, like Alaina uses. I sometimes I'll go that if it's getting too squirrely. But I have a 5 minute, a 2 minute, and a 15 minute showing. I have an hourly in the background that I will double check. And then I have my moving averages. I have an volume order profile, which includes point of control, value area high and low, naked points of control, naked value areas high or low. I use Fibonacci triggers in terms of just levels. that are pivot points. So I use those. And the trick is that you got to watch them carefully. And Norman, you are 100% correct in terms of when you're using your moving averages, and so are you, Jim, talking about that. What I have found, say, you're not using Fibonacci, so you can't really, you can eyeball 382, 50%, and 62% if you're running like an 8, a 20, and a 50 period moving average.
Yeah.
It's uncanny how, and I don't care what the product is, whether you're in the SPX, whether you're in the ES, whether you're in the NASDAQ, whether you're in a bond, if you use them so often, more times than not, your 8, your 20, and your 50 period moving average, and you can use a little bit of adjustment on those. You could have a 55, you could have a 33 or 34, as Norm was talking about. Those are fib numbers, so they work. But you'll find that your 382%, like if you're just looking for a normal retracement, your most common is 0.382.
Mhm.
And suddenly it'll show up in a moving average. So without having to rush to get them up, you're looking for a pullback, you can pick your price points right out of the blue. So you can have them there. So for me, and this makes people laugh, but Alaina, you're going to understand this because people say, well, what about a 15-minute chart? And I'm like, well, I also use bar timers. And so when we're getting down, I'm waiting because I'm expecting a turn. I will look at my bar timers on my 5-minute and my 15-minute because I want to see what the next bar is going to present. Because there's so many times where you're like, oh, look, it's breaking, and you want to get in it, but then you look down and go, oh, I got 30 seconds left on my bar. But I want to let you know 30 seconds could be an eternity.
Mhm.
And it makes, oh, yes, see, I knew you would agree. And you could do something and you realize, oh, crap, if I would have waited for the bar to change, I would have seen that the sellers are coming in. So you went in, you bought it, and the next thing you know, the sellers are coming in because it's all timed. When these orders start hitting the market, a lot of them are timed. And so they do it on the bar change. So those are all the things I use. And again, if I get that A plus entry, which would be where you're going to be catching like a move like that. You're going to get that if you're using, this is a bar chart, but if you're using candlesticks, you get a lot of signals just off the candles, like right there. See that?
Mhm.
That, so that's the bar switch, right? The 5-minute bar flips and it didn't go down. It went up. And as soon as it broke there, you just jump, you take it. And it was a great scalp, by the way. And you have to think about this is a 5-minute chart. That was, say your entry was 62.05 and that high was 15. So, but it's $50 a point. Well, the SPX, no. In the ES, it's $50 a point. So, in the mini. And I also do like to advise people if you're learning and you're just beginning to trade and you really want to trade the S&P, start with the micro. So instead of $12.50 a tick, it's $1.25. If you like trading the NASDAQ, which is a beast with a capital B, you can use the micro and it's 50 cents a tick. And the other thing I will tell you that the NASDAQ doesn't trade in ticks, it trades in dollars. So if you're trading in the mini and the NASDAQ, it's $20 a point. And it's not uncommon for this thing to go like up or down 5 to 10 points in the snap of a finger.
Mhm.
So what else I would add to being a day trader? My experience is that I was an options market maker on many floors around the world. And what I found was that you have to have the ability to stand in the chaos and stay calm
Mhm.
because without it, you can't hear, you can't see, you don't react properly. You're going to be acting out of fear. And then if you work on your mindset, and so I'm very interested to read your book, I mean, you work on that, you know how to like shove fear aside until you can really you got to see things clearly. But day trading, they're doing it for a while now. There are good days, there are bad days, but I tend to squeak them out each day, um, and work. But yeah, 5-minute, you can't really see anything, so you got to kind of keep it open. like keep pushing, pushing, pushing. And, and also just stuff like this. This was this was the hedge, Jim. That was the
Mhm.
hedge from the end of the JP Morgan, but also the Apple trade. And then this was the result. The last 5 minutes, they ended up selling it all the way back down. It's fascinating because you have to learn to live without them.
Since you have your chart up here, I would like to throw up the price of gold because, something a little bit is going on there as far as a little
Funny you
deterioration
should
that if we have a
ask.
conversation a month from now and gold isn't above 33.80 or 33.40, I think it has a possibility of accelerating to the downside of at least $200. But obviously
Absolutely, it has that. Look at that.
Well,
it
There
could
it is.
stop here as well. But I'm getting a little deterioration on it a little bit. But again,
But
if it holds this 3250, 3300 area, it could go right back up to new highs. But I think if it
absolutely.
doesn't get going in the next month,
And
I
that's
would think that
exactly, yeah.
maybe
Oh
it could
no,
go.
I
So what do you see?
100% agree with you. I agree with you. I
Yeah.
think that gold, my favorite markets, by the way, guys. So I think a 200 move down is totally within the realm of reality. And I kind of show both sides because, see, this, remember, we've been talking like a correction is needed. And I thought, well, that could be it. And that would mean that this is the first leg going up. But I also had to keep into perspective that that could be A, that could be B, and we're coming down into C. And you see that level, Jim? Talk about your
Hmm.
200. There it is on the nose.
Yeah,
That
that's what
would
I
be
was
the
thinking.
fib to contain a
Uh,
C wave coming down.
yeah.
So there, it's right there. So that's like absolutely capable. But I still feel very strongly about a strong upside. But you mentioned something's not looking right in gold when we're seeing this massive moves in platinum, when we're seeing silver just jump and jump and jump.
And
And
the relative strength seems to be a little weakening.
it is a little bit weakening, but I'm going to tell you why. And it has to do with the dollar, even though the dollar's going down, and that's usually gold's best friend,
Right.
but it's China. It's China. And you're right that China is buying platinum, but they're buying it to store. They're keeping it. And I think and they're trying to decouple the dollar from gold. So yeah. So there's this almost like a backwardation type of a move because they're accumulating gold, but they're buying the dollars to do it, but then they're selling the dollars and and then transferring it over into their
I mean,
country.
is it all part of the to take the dollar away from dominance? I mean, now that you've got to
Yes, it is
transfer.
absolutely correct. But
Yeah.
they still have large holdings in the treasury market. And they also, Jim, have very large holdings, this is what you brought up, in mortgage-backed securities.
Mhm.
Very, very large. So you talk about why won't the interest rates come down in real estate? Because there's a huge threat of China dumping their holdings. And what's that going to do to our real estate market? If, we're talking billions upon billions of dollars sitting in mortgage-backed securities that suddenly nobody wants, wow, what's going to happen to mortgage rates? So that's all sitting outside of all of this in this realm of what do we need to deal with? We have stability and we have instability. They try to get stable, it's not really being believed. And truly, I think it's a product of you cannot alienate yourself as a country from all of your trading partners around the world without making them angry. And so what's kind of happening is like you're going to continue to push this point. Okay, fine. China's going to go talk to Canada. Canada's going to go talk to them, and they're going to start building out in different relationships. And what I think was originally thought was like, oh, we'll isolate all these countries, and then they will come back to us, and they'll have to deal with us. It's like, no, they're isolating us. That's my thought.
No,
The
I agree with you,
United
Michael. It's a
States is going to
very
become
situation.
isolated and trade, and it's going to be devastating. So you talk about the canary in the coal mine, interest rates, mortgage-backed securities, a collapse in the dollar, and nobody wants to do trade with you. And so could that turn the market? Could that make the market come flipping down? Even though we have a lot of bullishness coming into the market right now. These options positions that were taken today, you wouldn't normally see them being put on in the size that they're being put on if we were really heading into a bear market. So it takes me, I take a step back and I think, okay, what is really going on? So what could kick the market just off of its high horse, so to speak? And that's something geopolitical and or interest rate related. I think it's really interesting because every stocks are this, they're going to go up. It's all everything's grand and glorious. It's like, is anybody paying attention to the bonds? It's like, because if you are, you're not going to say this just keeps going. It's going because, and Jim, again, something you understand, and maybe, I'm sorry, the other guys, you may understand as well. It has everything to do with how and what the options are doing. And they've become very, very, very prominent. And now we have zero DT options. So we expire every day, not
And
on the
a
paper.
good example of that is Apple today. They totally ran after the 205 calls.
205, 207 and a half, 210, 212, and 215. They went up to the 220s,
That's
Jim.
right. That's
Yeah,
right.
you're
But I mean,
absolutely
you know what I mean? They ran it in a spiking fashion, so all those shorts
absolutely.
had to cover because they didn't know what was going on. And with expiration either today or Friday, whatever, there was no way they were going to hold it.
Well, and that's the other thing because we were talking about because it's a holiday weekend. You were wondering what's going to happen with volatility. Think about it because volatility is going to come back down. Why? Because volatility equates to premium in an option. So what happens when we get to Friday? You know this drill, Jim. You're going to take some money out of the puts. You're going to bring the put price down because we have 3 days of decay staring us in the face. So it's just a natural process of what happens, but still it has an effect, right? And it's got a bigger effect now because these options positions are gigantic. And that's what I said before. It's like 580 million dollars is what got hedged in Apple. And if you looked at the stock has been coming in about 45 million to maybe 60 million on a super busy day, 92 million shares by the bell. And a lot of
Yeah.
that came in the last half hour, just what you were
Yeah.
saying. So this is incredible stuff. So do we want to? I try to take each one individually because collectively you're going to say, well, it is more of a equity wise, it's a bullish picture. Broader market wise, including other things, I don't think it is. So it's
Uh,
crazy. It's crazy.
Alaina, could you spend a little bit of time speaking about that book that Michael just picked up? Because I don't think everybody knows much about it. And then also close out with a little bit of any special offers you have or anything like that.
Yeah, so the book Trade Brain, basically, I just got curious. I know this sounds a little morbid, but I was like, what does it look like if I were to like take a trade and have my brain here? Like, what would I be seeing going on up there? So it's all the different functions, all the different things that are firing off in our brains that affect our decision making. And so the book it is for traders, but like it really applies to anything. It's very much like behavioral psychology. There's
Hmm.
neuroscience in there,
Hmm.
and basically just your prefrontal cortex. That's like basically what we want to have online, and we need that locked in. And so it's just about like how we feel and how we behave and make decisions when it's not online and when it starts to kind of downshift and we go back into those like survival instincts, that fight, flight, or freeze, and how that shows up and
Hmm.
looks like in your trading. So my goal was to just help traders understand themselves on a deeper level, just so they can avoid some of the mistakes that happen when our brains are not firing at like, top peak performance, which we're human, right? We're not always going to be in that flow state, but like we have to recognize when we're not in it, and we have to have that discipline to walk away from our finances when we're not. And then as far as offers go, I have a live class series coming up in July, the last week of July. It's like 7 days, the last 7 days. But we're going to focus on index funds. So we'll hit futures, we'll hit ETFs. Um, and yeah, I'm excited. There's a lot of traders that are into the index funds. Also, volatility. We can't talk about those things without the VIX too. But yeah, just helping traders understand the macro side of things and help them make more sense of the news and how they can actually use it to their benefit.
And Norm, you had a special offer as well. Do you want to mention
Yeah,
that again,
yeah,
please?
I do. But I am an Alaina fan right here. I never met her
Oh
in
yeah,
my life, but I am an Alaina
no doubt
fan.
about it.
I mean, what a combo, she and I, because what you've just described, get the book. I've never seen the book. I don't know the book, but I
Thank
know what
you.
you're saying. This is, and when Michael spends money, it's a good book. So the idea of understanding what you're going through, on a real basis, and then moving to my stuff that actually makes the change from a subconscious level. This is a potent conversation. I mean, I
Yeah.
just love it. I just love what's happening here. Um, I love the platinum, so take a look at it. My offer, you put it back up there, thedisciplinetrader.com. It's actually thedisciplinetrader.com/Excel you have there. That's the special that we have right now. It's a $9.97 cut to $3.97. The recordings of the live stuff. That's why I've reduced it for those people that have the discipline to actually follow it on their own. But I do want to say before I think we should have, one of the things that I've been dealing with right now is AI and how
Yeah.
AI is going to affect our business. Everything is going to be mechanical.
Yeah.
Because my view is that the next 2 to 5 years, anybody that buys bots and these are being experimented on. But in that period, 2 to 5 years, all of this, most of what we're doing is going to move into the whole AI thing, because it's going to be very, very accurate. So we've got 2 years here um, uh, to really move our understanding of the market to people before the bots take over. So I think we need to have a discussion about the future and what AI means.
Yeah, I agree. I agree with you on that.
Did you see on
Michael, you want to talk about that trading room you have and how people can get a hold of you?
Sure. Um, if you want to get a hold of me, email michael@mjf1partners.com. I know it's at partners, but I'm the only one. So it's michael@mjf, the number one, partners.com. Please do email me. In the works still, but starting soon, will be a new trade room. Right now, I just have um, a, a live feed, and it's more for day traders. But I want to open this up, and this is Alaina, Norm, this is up your wheelhouse as well, in that the what is also going to be focusing on is the mindset, is mind metrics, is the trader's brain, everything that we've just talked about. I want to include, because people don't like to admit it, but I think if you kind of open it up and say, it's okay, let's talk about it. And as it is applicable to trading, and you're actually doing it in a trade room. So you're able to, people might say, oh, I just really blew that, blah, blah, blah. You can deal with it immediately. So that's kind of my concept. I really got to get that together. So I may be contacting both of you guys to get some input on that, because I don't know how easy it would be. But that's to come. I'm kind of looking for September, because I'm dealing with a couple issues prior to that. Plus, I do need to take a break. Um, but right now, I do have two channels on YouTube, and within those channels, on one of them, I have memberships, and I do a morning and an afternoon or evening update on the S&P 500 and the NASDAQ 100. And then I also do weeklies on those. But then I also do weeklies on the Dow, on the Russell, on gold, silver, and platinum. And I kind of keep the bond off of it because it's just really too confusing. But I need to start adding that.
Do you sleep, Michael? Do you sleep at all?
I do actually. I do. I'm still, yeah, I just work. Yeah, you should. My spouse would say, every day, you're working every day. And it's like, it's true. And when I do get away from the house and we go travel, I have to take everything with me.
No, no, Michael, no.
It's a very nice little screen, and I have my MacBook
Okay,
here, and it's very easy to set up. And hey, thank you, Elon Musk, because Wi-Fi is available everywhere.
All right.
beautiful.
All right, you guys, we're going to wrap it up right now. As far as Option Professor is concerned, if you'd like to learn about options absolutely free of charge, we have a free seminar or webinar tomorrow. So you just need to send an email to optionprofessor@gmail.com, and I'll send you the link. And you can learn all about how to trade the options market. Okay. Alaina and Norm and Michael, thank you guys. We're going to do this again. It's always fun. And I'm going to send it back over to David right now.
All right. Yeah, thank you. Excellent discussion today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube or Substack or your favorite podcast app. Or you can also just go to TimingResearch.com and get access to any of the shows or presentations there. I just want to thank my panel again for today. Norman Hallett of TheDisciplinedTrader.com, Michael Filighera of LogicalSignals.com, Alaina Nicole of InvestingBay.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you.
Thank you.
Nice meeting you, Alaina. Good to see you, Michael.
Good to see you.
And you too, Option Professor.